All right, now this is the top down for Walton, WTC. This is versus BTC. I'm going to start here just because there's no it's really too bad that these I guess exchanges or chart providers aren't providing um, certain tokens versus or parity against the dollar, which I've talked about this before, how assets versus money are on two separate sides of the equation. And right now, even though we do like to call these cryptocurrencies, and in a way, we are using them in some fashion that's similar to how we use currency, but really they're all these digital tokens, and these are digital assets that we are pricing in dollars at the end of the day, and not versus BTC because pricing something versus Bitcoin when it has a good rally is obviously putting a higher number in the denominator, and so it drags the chart down, and it's not a real accurate um, description, or the chart doesn't really show you what that asset is doing. The asset could be going sideways, and just because Bitcoin's ripping, it looks like your asset's losing value. And at the end of the day, we're all trying to make money here, and money, trying to make dollars or euros. Um, and so it's too bad when we bring on Rhythm, our trading platform. That's going to be a goal to make sure that we're pricing this stuff versus what we're using as money in today's society. So anyway, this is that's a kind of a different topic I don't really want to get into, but we do need to pay attention to the bands here. Um, Walton, when we look at it versus the dollar, I'll do that in a second. It's still actually very bullish. But as far as where you want to have capital, if we break the bands here, you're probably better off being in BTC versus having a bunch of capital sitting in WTC, because it's just going to show you the relative performance that if we break the bands, maybe we trade back here towards 10,000 or 100,000 sats. And so this is where we broke out from. Typically in our model, if we were looking at WTC versus the dollar right here, I would be concerned that we're going to move back towards the 200 and or pi, which isn't on this chart. There's not enough data. But this is a big area that kind of needs to hold. Let's look at it real quick on the weekly and some of the higher time frames. I'm not sure the monthly will be useful as usual. It's tough to see the stochastic here, and I've played with the settings. I don't know why Coinigy does this sometimes. This just gets really light and kind of faded. But you can see that this is a pretty good weekly cycle here. It crossed back in the middle of December and then went on a nice 1, 2, 3, 4, 5, 6 week run. So there's an 8.9 count we like to keep an eye on. That was a pretty good move towards that cyclical frequency. And so now here we crossed. This is a little bit concerning that maybe we have a down week several weeks here, and that's another reason why we do fail to hold the bands, and Bitcoin wants to break out through this 11,000, 12,000 area, which happens to be pi on the 4 hour. Then you're going to be better off having your capital in BTC. Doesn't mean you need to get flat, Walton. Just on a relative value basis, that's probably what that's going to look like, and that's what the timing component is saying here on the weekly. When we go to I guess I'll go to the monthly just for the sake of it. No cycle data. It is worth noting here, guys, this real money candle, we call it. It takes a lot of real capital to make a big move like that. That's a pretty good wall. So we have a wall concept about halfway we retrace. So this is, again, an area that needs to hold. And there's a high probability that a 50% retrace, maybe we do continue the rally from here longer term. 100% retrace would be unfortunate. That's not the probability. 100% retrace are not the probability. The probability is that on the retrace, 50 to 80%, you will get a subsequent reaction the other way, at least initially. The daily, we kind of discussed the time component here is the daily cycle's low, so we could easily just do an about face, put in what we call a bullish engulfing pattern. That would be bullish. That would actually be a reason to add. So let's pay attention to this here, and we'll watch what Bitcoin wants to do around the pie line on the 4-hour. We'll go to the 4-hour here. We can see here's the pie line, which is fractal in our model. You get to the bands on the daily, you get to pi on the 4-hour a lot of times. So we're right there in that same location. There was some support here also. All right. That 4-hour cycle's low, RSI is low. So I wouldn't say we have a bullish event right now to buy yet, but we are back to an area that we really want to focus on. I like to sometimes wait and let the market prove itself. We have 6, 7, 8 different setups or executions, setups as far as the execution goes when we talk about our model on that. And there's 3 pillars: analysis, execution, and risk. And so we like to sometimes wait for those events on the chart, be it a bottoming tail, bullish engulfing, topping tail takeout, bottoming tail takeout, red bar ignored, blue bullish candle ignored, all these different types of setups that we identify. A lot of times I like to wait for that before I take an action. I think that's kind of wait and see right now. On this one also. And hourly, this chart will really show you the intermediate term. So you see how the pie line, which is this dotted green line, rolled over. We cycled away from it, back to it, away from it, back to it, away from it, back to it. But that's showing you this intermediate term downtrend that's been going on here with price, from an intermediate term perspective. So we're a little bit oversold, but again, this isn't a time to be aggressively long because the intermediate term is bearish. Better time to be aggressive is when you're back in the northern hemisphere like you were here on this run up. Once you got above pi, that cycle was then bullish. The trend was much more momentous. You could be more aggressive on the long side. Once you roll into the southern hemisphere, it's about patience. It's about defense, how you work your position size, cutting risk. You know, it would be nice if you could short, depending on where you are in the world. If you can short here, there's even some opportunities to do that, to hedge and or just day trade. All right, so hopefully, guys, that helps. I guess the 30 minutes going to offer you the same thing. 30 minutes great for day trades. Place to be trading this is not on the long side if you're trading near term or day trade stuff. It's been on the short side. So each time you get these rallies in the cycle, boom, short, covering, shorting up here, covering, shorting up here, covering. So the near term has definitely been bearish as well. So you have a near term bearish trend, intermediate term bearish trend within the context of the long term uptrend. So long term uptrend, we got to watch this area. Intermediate term, we need to start seeing higher highs and higher lows before, again, that intermediate term turns bullish and warrants more aggressive buying and position sizing. So still core long here, WTC, and we will be updating that in our paid real-time alerts room for any updates on that positioning.